You look at all the BRICS nations, they're all talking about trading their local currencies and settling imbalances in gold. You don't see a common currency. You don't see a replacement for the dollar. Everyone used their currency, and gold is finding a common denominator that is trust within the system, whether it be in the Southern Hemisphere or up here in the United States. But something needs to change. And I'm concerned that if it doesn't, things are only going to accelerate in terms of our indebtedness and the effects that ultimately that will have on the reserve currency. Because at some point, a currency that's based on trust that has lost a good deal of trust in weaponizing the treasury market, in sanctions, in tariffs that are actually sanctions that are masquerading as tariffs, and fiscal and monetary irresponsibility, the rubber meets the road at some point. So concerned that tough times ahead, and the only way that you get out of this alive is to have assets.
The gold and silver markets have seen one of the most unusual and misinterpreted developments in recent times. Both metals suddenly declined in what appeared to be a typical market correction following 9 weeks of consistent increases that drove prices well above important resistance levels. However, Andy Schectman claims that this wasn't merely a chance sell-off. The timing, accuracy, and trading patterns point to a far more calculated action intended to briefly depress prices, so big institutional players can covertly amass actual gold and silver before the next significant spike. Schectman has been cautioning about this widening divide between the paper and real markets for years. Stress among short sellers is shown when algorithmic transactions lower prices during slow trading hours, but the actual demand for physical metal continues to rise. It indicates that the physical supply is contracting more quickly than many people believe. In the meantime, big US institutions, central banks, and sovereign wealth funds are accepting deliveries, demonstrating that the world's most astute investors aren't duped by brief price declines. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
Now we had like a little bit of a correction. What are your feelings right now, Andy? Is it going to continue to correct, or have we found that base level? What's happening right now?
Well, I think it's when you look at it from the mainstream perspective, yes, much of what they said was valid. It had gone up really unencumbered for 9 straight weeks. It was overbought. All of that's valid. All of that's true. It had busted through well in excess of moving averages, the 50, the 200. All that's true. It was ripe for a correction and a flush and a pullback, and all of that is true. And if it had been said that way, of course, they always throw in, is this the top, the 2011, 1980 top, where it starts to head down and maybe this is it. Maybe look for other assets, Bitcoin or whatever the hell you want to talk about it. Look, if they would have just told the other half of the story, I would have been more inclined to acquiesce to some of their validation or to some of the things that are valid. I think by not telling the whole story, it invalidates much of what they say. The initial snowball that was pushed down the hill was in the middle of the evening after all of the markets had closed and the New York traders were in bed, and it was sold in the access market, it being gold and silver, billions of dollars worth, in the middle of the evening when there's no liquidity, when the markets aren't there to catch the bids, and instead the driving down of the price, dumping it onto the market at strange hours. When it started, it was in the middle of the night. I don't remember exactly what time. And then the next day they did it at like 8 or 9 o'clock at night, when in between New York and Asia. Again, New York's closed, Asia hadn't opened yet. And you see a price that's getting clobbered because all that does is hit the sell stops that are embedded in algorithmic programs along the way, and they drive the price down. In other words, this was done as a drive-by shooting for an effect. There would not be a trader on the planet with a third of a brain cell that would dump all of this at a time outside of New York trading, where that's where the price is set. That's where the bids would be. They would do it slowly and judiciously over time, even a matter of days, that amount, slowly, without alerting or waking everyone up to a dumping of metal. And they would catch all of the demand for 9 straight weeks that have been growing up. They would have got a much better settlement. In fact, they guaranteed themselves the absolute worst settlement. And so the selling triggering stops made the market collapse. Now, what they also didn't talk about, and let's just stop right there for a moment. If they would have said all of those things, market's overbought, gone up for 9 straight weeks, the technicals said this is ripe for a correction, for a flush, for a pullback, whatever validation they want to attach to it, It's invalidated by not saying, by the way, some idiot dumped it in the middle of the night when there was no liquidity in the market and there were no traders, and this is done in the access market. Nobody would do that. They conveniently leave that part out. The other part that they left out was the second day when it was done in between New York and Asia. Again, equally a stupid time to do it. Within just a few minutes, the silver price shot right back up. Well, how the hell did that happen? Well, if you look at Michael Lynch, and he does an amazing job at analyzing the COMEX movements, he says that it was Bank of America and Morgan Stanley that came in and did the purchasing. It was European banks that did the selling, and it's commercial banks, and it was Morgan Stanley that came in and did the buying. Well, why is that valid? Well, the chief investment officer of Morgan Stanley recently came out and said the 60-40 rule of investing that Wall Street's used for, I don't know, 50 plus years was invalidated now by
60-20-20.
Yes. In other words, sell half your bonds and put 20% into gold. And then that's Morgan Stanley. And then Michael Hartnett, the chief head analyst for Bank of America, says no, 25, 25, 25, 25. 25 stock, 25 bond, 25 short-term treasuries, 25 gold. And I mean, in my whole career, I've been 35 years, they've never said that at all, ever. Yeah. Maybe 5% they would say. So the two American banks that are saying 20 to 25% allocation come in and do the buying, according to Michael Lynch. And he's got a great Substack. People should check it out. So when we talk about this, the fundamentals are fugazi. The fundamentals are strong as hell. The LBMA is being bled down. I did an interview with Alistair McLeod this morning, and Alistair's like, yeah, I see this morning that the slight backwardation is reappearing between London and the US again. So all the metal that got shipped from Shanghai at exorbitant lease rates and whatever 20 or 30 million ounces that got shipped from COMEX over there to quell the problem. Well, what good did that do? There's still deliveries next month and the month after and the month after. And so the physical demand is overwhelming the paper price. And it's desperation when you come in the middle of the night and dump at a time that no one would do it. It was specifically done to cover shorts and for effect, and for the media to jump on and tell half the story without saying, by the way, some idiot dumped it when no one else ever would, to maximize the worst possible settlement they could ever get. And so that to me invalidates so much of what would otherwise be valid statements. And I think it goes to show where silver is ultimately going when the U.S. government has proposed and written into draft, and it will be accepted that silver will become a critical mineral in this country. Things are changing. And I think what we saw was a desperate attempt by some really caught commercial banks that are massively short, and the rising price coupled with a government shutdown and trade meetings with Xi and all sorts of stuff going on. The last thing, and interest rates going to be lowered again. The last thing they wanted is for metal to get way out of control, and this is their way to stop it. But I would argue only temporarily.
It's simple to conclude that the market was overbought after a 9-week run, or that a rapid decline was only a typical correction. However, Andy Schectman's perspective goes much beyond that. According to him, the current sell-off was planned and executed with great care. Schectman claims that the steep price decline occurred between the Asian and US trading days, when there are less purchasers. The core principles remain unchanged. Gold purchases by central banks continue to reach all-time highs. London's bullion reserves are still declining. Additionally, an increasing scarcity of actual physical metal is indicated by the resurgence of backwardation, in which current prices are higher than future ones. Paper market manipulation in this type of setting can only last so long until actual demand compels a price change. Schectman advises decision makers to be aware of this fact. He thinks that current initiatives like tariffs and reshoring are more than just economic policies. They are a part of a bigger scheme to discreetly lower the dollar and revitalize the American manufacturing sector, perhaps by partially tying the currency back to gold. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
The exploitation of the delivery option in London and the US is something that was rarely exploited, and now it's being exploited not only by all of the BRICS nations and Russia and China and India and Saudi Arabia and all of the countries that are standing for delivery on all of the world's commodities, but someone got to President Trump, in my opinion, and said, if we don't do this, we're dead. We're dead, because they're draining the shelves across the globe. And so they phrase it as tariffs, and they start bringing it back. It's not tariffs, it's reshoring. All the gold and silver, billions and billions and billions and billions and billions of dollars worth of metal so far this month, which is a non-delivery month in silver, just shy of 8,000 contracts have stood for delivery already, at 5,000 ounces apiece. So do the math. I mean, it's not a delivery month, but it's still an awful lot of silver.
Yeah, it's a lot.
And yes, it is harder because if in a game that is just cash settled amongst coordinated players across the globe, it's easy to suppress the price. But when all of a sudden you are being challenged not only by central banks and sovereign wealth funds across the globe, but now a large, what appears to be entity here in the United States who are literally bringing in billions of dollars a month in silver onto COMEX, something's different. Well, I mean, we need to do something quickly. You mentioned 38 trillion in debt and a trillion in interest payments, which is the number one line item. We added a trillion to the debt in 71 days recently. It's
Yeah, it's
accelerating.
crazy.
Our fiscal irresponsibility is ridiculous. 60% of America can't read past the sixth grade. 60% of America has no college education. Most people in the country can't write out a check for $5,000 for an emergency. We're
Wow.
broke, we're insolvent, and the 38 trillion doesn't take into account the over 100 trillion in unfunded, 150 trillion in unfunded liabilities, Medicare and Medicaid, and Social Security and government military pensions. And I don't know, there's divisiveness in politics. There's, after the last 4 years of policy that was too stupid to be stupid, we've now entered a period of time where I think it's all about, an acceleration in a new system that's coming. So I'm concerned that we have hard times ahead of us. And I think what President Trump is trying to do, if there's any nobility in it, is to massively debase the dollar, to devalue it, to ultimately bring back manufacturing and to relinquish, according to Triffin's dilemma, relinquish the reserve standard. If we are the reserve currency, we will never have a manufacturing base. We will always run trade imbalances. I believe they want to get rid of the world reserve currency. They want to bring back manufacturing. And if Judy Shelton is right, and they peg gold to the back end of the treasury market next July, you can bring back with a 20, 30, and 50-year treasury redeemable in gold with zero coupon, no interest in 20 or 30 and 50 years. You can bring back manufacturing immediately with no upfront borrowing costs. And with the passage of the Stablecoin Act, the Genius Act, you look into it and you see that every time money moves, stablecoins will be created. And the interest, because they're backed by U.S. treasuries, the interest that is generated is not transferable. Tether, as an example, USA Tether, by the way, their CEO is Bo Hines, the guy that was Trump's crypto advisor until August. He's now backing US, or the CEO of USA Tether, which is already stablecoin, or excuse me, Genius Act compliant. They will back everything with treasuries, which creates synthetic demand for the treasury, pushes rates down, but they will take the excess, the interest between the stablecoin and the treasury, and they'll buy gold. And I think they'll buy Bitcoin, and they'll buy gold to make it go much higher. They already have over 8 billion worth. They were just at the Beaver Creek Mining Summit. They're going to continue to buy gold to devalue the dollar and to ultimately peg the back end of the treasury market to bring back manufacturing, because we need to. Our children and our grandchildren are dead otherwise with illiteracy and uneducated masses and a massive spread between the haves and the have-nots and no manufacturing base and massively indebted. We need to do this no matter what. And I think they will do that through devaluing the dollar massively by letting gold go higher. I think they'll let Bitcoin go higher and use it to pay off the debt. This isn't conspiracy. Read the executive order that next year they're talking about revaluing gold as part of the Bitcoin fund that Senator Lummis from Wyoming has been advocating for. And if they do revalue it, it devalues the dollar. It's not about revaluing gold. It's about devaluing the dollar to a much lower level so we can sell our products to the world. You have to bring back manufacturing. How do you do that? You peg gold to the back end of the bond market and you end up having zero upfront borrowing costs. Like in the Shawshank Redemption, there's 2 miles of shit that we have to crawl through to get to the other side, like Andy Dufresne did. And that's what happens with the irresponsible fiscal policy that we've had and the brain dead monetary policy we've had for all these years. To get to the other side, we need to produce things again. We can't be reliant on pharmaceuticals from aspirin to penicillin and everything in between from the Chinese, or aircraft components or military components. We need to be the engine of growth and manufacturing again for a population that, with this limited, advanced education, 60% with no college degree, and AI will take 50% of entry-level jobs in the next 3 to 5 years, they say. Well, we have to do this. So what am I concerned about? I'm concerned about tough times. I'm concerned about inflation and half empty shelves that until we are able to get our fiscal house in order and start manufacturing again, I think that unfortunately that there will be a couple of years of difficult times, but I think there is reason for optimism if we are able to pull this off. At this point, what choice do we have? We can inflate, we can default, or we can try and grow our way out of the problem. And the only way you grow your way out ever is to bring back manufacturing and to give up on being the reserve currency.
Andy Schectman concludes with a sobering but incredibly perceptive statement regarding the current state and future prospects of the American economy. The country's financial situation has reached a dangerous breaking point, he says. He claims that the United States is broke and insolvent with over $38 trillion in national debt and over $150 trillion in unpaid liabilities. In just a few months, interest payments have grown by trillions, making them the single biggest item in the government budget. Schectman contends that the United States needs to move quickly by radically reorganizing the system rather than increasing borrowing or printing. Whether acknowledged or not, he thinks the government's true goal is to purposefully lower the dollar in order to rebuild America's manufacturing base. He emphasizes that America will continue to have enormous trade deficits and lose its industrial base as long as the US dollar is the world's reserve currency. He proposes that in order to undo this, officials might soon tie gold to long-term treasury bonds, establishing a system in which gold supports the value of US debt. In addition to stabilizing the dollar, this would enable the United States to finance infrastructure and industries without having to pay exorbitant interest rates. He links this idea to recent advancements in digital finance, such as the Stablecoin Act, which links digital dollar assets to US Treasury bonds. According to Schectman, this will create artificial demand for government debt while also enabling institutions to use the income they earn to purchase Bitcoin and gold, raising their values while purposefully weakening the currency. He maintains that this is a planned reset intended to regain competitiveness rather than a conspiracy. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.